Marcus Aurelius never checked prices. He checked principles. What if the thing you're calling research is actually the leak in your portfolio? Here's the question nobody wants to answer. How many times did you check today? Because here's what we discovered. The average investor checks their portfolio 17 times per week. They think they're being disciplined. They think they're staying informed. But here's what Marcus Aurelius wrote in Meditations. Book 4. The impediment to action advances action. What stands in the way becomes the way. Every time you check, you're not gathering information. You're creating impediments. You're manufacturing decisions where no decision is required. And each manufactured decision costs you, not in what you lose, in what you never allow yourself to gain. Let me show you what I mean. We analyzed investor behavior across the 2020 crash, the 2021 boom, the 2022 correction. The investors who checked their portfolios daily underperformed those who checked monthly by an average of 3.7% annually. Not because they had worse strategies, because they had more opportunities to abandon them. Every refresh is a chance to second guess. Every notification is an invitation to panic. Marcus Sterling has been through 7 major corrections. He'll tell you the same thing every time. The investor who wins isn't the one with the most information. It's the one with the most conviction. And conviction can't survive constant interrogation. Marcus Aurelius ruled Rome during plague, war, and economic collapse. Markets were chaos. Information was scarce. But here's what he understood that we've forgotten. The quality of your decision has nothing to do with the frequency of your observation. You think more data means better choices. Marcus knew more observation just means more anxiety. Today's market proves it. The S&P essentially flat. The Nasdaq down less than 1%. The Dow up just over 1%. The VIX sitting at 15.81. Completely calm conditions. And yet, I guarantee you someone watching this checked their crypto holdings 3 times before lunch. Not because anything changed, because checking feels like doing something. But doing something isn't the same as doing the right thing. So let me take you inside a real moment. March 2025. 15 months ago. Alex Chen sitting across from Marcus Sterling. Alex has $10,000. Saved over 2 years. He's been waiting for the right moment. The right entry point, the perfect signal. And the market just dropped 4% in 3 days. Alex's smartwatch is lighting up. Notifications from every investing app. Red candles everywhere. Financial news screaming about correction territory. His hands are actually shaking as he opens his laptop. He looks at Marcus. Is this the bottom? Should I wait? What if it drops another 5%? Marcus doesn't even glance at the screen. He asks one question. What's your thesis? Alex stammers. My thesis? I want to invest for the long term. Build wealth. Retire comfortably. Then Marcus says, what does this week's movement have to do with that? Alex doesn't have an answer. Because here's what he's feeling, and here's what you've felt. The conviction he had 2 weeks ago when the market was up evaporated. The moment prices fell. It wasn't real conviction. It was comfort masquerading as strategy. Real conviction, Marcus explains, doesn't change when conditions change. That's the entire point. Marcus Aurelius wrote, if it is not right, do not do it. If it is not true, do not say it. The inverse is also true. If it was right yesterday, a 4% drop doesn't make it wrong today. Marcus Sterling opens his own portfolio, shows Alex. He'd invested $43,000 across index funds 18 months prior. The current value? $39,000. He's down $4,000. His expression hasn't changed. Markets don't reward observation, he says. They reward patience. Your $10,000 isn't asking you to be smart. It's asking you to be consistent. Alex looks at the screen. At the red. At the trending tickers. Bitcoin up less than 1%. Ethereum up 1.3%. Cardano up 4.7, Solana slightly down. Everything moving. Everything screaming for attention. But what about opportunities? What if crypto runs and I miss it? And this is where Marcus leans forward. You're not investing $10,000, Alex. You're investing your attention. And attention is finite. Marcus Aurelius commanded legions, governed an empire, wrote philosophy that survived 2,000 years. You know what he didn't do? Chase every signal, react to every shift. He wrote, confine yourself to the present. Not because the future doesn't matter, because the only thing you control is what you do right now. And right now, you have a choice. Build a strategy that works regardless of conditions, or build a strategy that requires you to predict conditions. The market didn't bottom that day, by the way. It dropped another 2% over the next week. But Alex made a decision. He took 7,000 of that 10,000, put it into 3 low-cost index funds, VOO, VTI, VXUS. Broad, boring. Exactly what Marcus recommended. The remaining 3,000 he designated for quarterly additions. Not monthly, not weekly, quarterly, 4 times a year. No matter what the market did, no matter what was trending, no matter how many notifications lit up his watch, here's what happened. Over the next 6 months, the market recovered, then climbed. Alex's 7,000 grew to 8,200. But more importantly, something else changed. He stopped checking. Not completely, but his 17 checks per week became 4. Once on Sunday evening. 3 times he almost checked midweek, felt the urge, and asked himself Marcus's question, what's my thesis? The thesis didn't require a midweek check, so he didn't. By month 9, his quarterly addition strategy meant he'd invested during another dip he would have missed if he'd blown his full 10,000 on day 1. He bought in when the market was down 3%, not because he timed it, because his calendar told him to. His 10,000 is now worth 11,400. But Alex will tell you the real gain isn't the $1,400. It's the 43 hours he didn't spend staring at charts, reading predictions, refreshing portfolios. 43 hours he spent building actual skills, deepening relationships, living his actual life. That's the return Marcus Aurelius would measure. Because here's what the emperor knew. Wealth isn't what you accumulate. It's what you don't surrender. And every time you check, every time you react, every time you abandon your strategy for your anxiety, you're surrendering. Not money. Control. So here's what you do. Right now, before the next video, write this down. My strategy doesn't change when the ticker changes. Put it somewhere you'll see it. Your phone lock screen. A note in your wallet. Wherever you'd normally check your portfolio. And the next time you feel that urge, that itch, that need to know what's happening right now, read that sentence. Then ask yourself Marcus's question. What's my thesis? If the thesis hasn't changed, close the app. The market will be there tomorrow. Your conviction might not be if you keep interrogating it. Knowing the principle isn't enough. The next video shows exactly how to apply it.